Welcome back to the Journey to True Wealth. President Harry S. Truman famously said that the only thing new in the world is the history that we don't know. Well, since 1973, there's a lot of history that we do know. And in those 50 years, what we do know is that we've had 3 bear markets that are close to, or actually a little bit more than 50% declines. So what causes these outsized market movements, and what causes our drastic reaction for stock prices to change so much? Well, I've got 4 points for you. First, I don't think most investors realize that stocks actually represent shares of companies. I think they think it's a gambling machine. They think it's a trip to Vegas. We view the stock as a stock market, not as an investment in the biggest companies in the world. Second, most investors view the economy and our stock market as pro-cyclical, not counter-cyclical. And what in the world does that mean? Well, they view it that when stock prices are going down, that actually risk is going up. It couldn't be farther from the truth. When stock prices go down, there's less risk. But when stock prices are at all-time high, there's so much more risk of them falling. I don't think most people view it that way. Third, there's been lots of studies that show that our human response to pain is 2 times greater than that of pleasure. So when people's portfolios are down, they experience that pain in a greater way. We have to acknowledge that. I don't think there's much we can do about it other than acknowledge it. And the pleasure of seeing their portfolio go up, that's great, but it doesn't feel as tough as when things go down. And lastly, and I think most importantly, is people have a tough time separating temporary volatility from permanent loss. Now, I look at portfolios that have had bumps and bruises over time, but they've gone up significantly over 10 and 20 years. And I also remember when Puerto Rico had a tough time in safe municipal bonds and people lost half their money. So I think we have to be very clear on what's volatility and what's a permanent loss. Now also, what I know since 1973, in those 50 years, the market's up 35 times. Cash dividends are also up substantially. What's that equate to? That's about a 10% annualized return. Think of all the difficulties we've had over those years, all the changes in presidents, the wars, the different economies that we've had. Yet the market has persevered and averaged about 10%. Now the real question is, what are you going to do when times get tough? I think it really comes down to, you have the right plan. Or maybe, do you have the right planner? So we'd love to have a conversation with you. Just click the button up here to the side. We'd love to have that conversation, sit down, have a cup of coffee, and see if there's some value we can add, maybe help you find your freedom. Have an awesome day.